Everybody, it's Tuesday, May 28th. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had July corn up $0.0125 at $4.66. July soybeans were down 6 3/4, $12.41 1/4, and July Chicago wheat was up 4 1/4 at $7.01 1/2. This morning, the USDA announced an export sales announcement to Mexico, 215,000 corn, 165,000 for 23 and 50,000 for 24. And once again, that was to Mexico. Good morning, guys. Hope everybody had a great weekend. We're back at it here. Overnight stories, obviously continued dryness in Russia, got wheat going early. We kind of finished a little, kind of on the lower end of the range overnight, but kind of the same narrative continues, in the market. We're gonna have crop progress out here this afternoon. Take a look and see, just how we continue to progress there. But Dustin, we'll throw it over to you to start us off this morning, kick it around the room, and share a few thoughts on what you see as we start the week.
Yeah, thanks, Dan. Yeah, we once again tested the 200-day and the D's corn contract overnight. So 200 days right around 492.5. We got to 493 and then backed off of it again. Of course, wheat's been leading this move the entire time. So wheat corn spreads have been very, very strong. Like you said, wheat kind of backed off of that a little bit in the overnight session. On Friday, that commitment of traders report showed funds managed money net using futures and options sold about 50,000 contracts, just under that. After a couple of weeks of pulling out of the short side, they jumped right back in. A lot of that was fresh selling again.
That's corn, right?
That's corn. Yeah. Thanks for the clarification. Yep. Yeah. So corn sales, kind of makes sense when you look at the chart that there was a lot of selling that week. But the fact that they're willing to get back into the short side is not a great sign for corn. We'll have to see what they do again through the end of this week because we're back up into the 490s. But that transfer of ownership has happened to a degree, but now the funds want to be short for the long haul. They definitely have a big say in price action. There needs to be a catalyst for them to get out. We look at the balance sheet. I think Justin said something before we got on here about, lack of imagination. I think we can imagine both sides of the market, abundant supplies at the end of the year and, another large year-over-year reduction to the balance sheet as well. A lot of it comes down to yield and where acres land. From our perspective, it makes sense still that, the 90 million acres of corn that they had listed, chalk that up with a not so great start to the year. And Safrinha is quite dry right now. Perhaps the global grain balance sheet is in decline. And if we don't hit that 181 yield for U.S. corn this year, the balance sheet could very likely, take another turn down going into 25. So I think all things considered, what probably surprises me most is the resiliency of the bean corn ratio being as strong as it is. I think that's the one thing that probably still looks like that's going to be one area that we're going to be watching pretty closely. Why beans have been so strong to corn, considering we continue to see all this business, like this another large sale to Mexico again for old crop this morning. Dan just announced they've been very resilient buyers of corn through this whole process. And I'd be curious to see what that ratio does in a month or two.
Yeah. Go ahead, Justin.
Yeah, I was going to say, the ratio, I think it means a couple of different things throughout the year, going into planting decisions. Obviously that, we use that a lot to determine what crop's more, profitable to plant. And we've talked, for months and months about this with, interest rates and cost of production and ratio. And once the crop's planted, it really doesn't matter what the ratio does. I think now the way we look at it is just, the relative strength of the fundamentals, versus the other. So, the corn bean ratio doing a move right now isn't really going to do anything except for, the next South American crop, in the short term. right? So it can do anything. I think the way when we talk about it now, it's more of just when you look at, a carry out in the, you know, soybean complex, which looks like it's going up in the US and globally with a demand base that's kind of stagnant right now, versus corn, which looks like it's the opposite, right? Where the fundamentals are shifting to a more favorable outcome than they have been. I think that's where there's a shift coming in that ratio in general. I think it's a little bit of a hangover of this, renewable biodiesel, this, large crush facilities going up. Still kind of a hangover from trying to get the pipelines filled up from the Argentine problem we had a year ago. So all those kind of, reverberations of issues that, that were the old fundamentals, I'll call it, I think are still in that really choppy ratio type trade. But yeah, to Dustin's point, I think when you start seeing the fundamentals going different directions, it'll be curious to see if beans can continue to hold strength on these rallies. I think you saw it fail pretty good last night with wheat up 20 some cents. They tried to try to get beans higher, kind of failed. Everything failed, to be fair, but beans led it to the downside first, and especially with meal. So those have been the really two big buying things, has been meal and beans. They're basically flat in beans. I think they're probably net long a little bit after last week's action late. In meal, they're 100,000 contracts long. So it had massive, 200,000 contracts that we've covered in the meal complex, during that rally. So, we'll see what happens here. We had the Rio Grande do Sul. Ben talked about it. I think it was probably way blown out of proportion. If there was a major supply problem, you'd have seen huge announcements. We had a rumor of a couple of cargoes off the PNW.
Yeah.
That doesn't really justify a dollar rally. So probably some out of place hedges and out of place positions that had to get run in. And the news lines, headlines got people to cover. But now I think we're go back to where, we'll get the planning progress out of the way. And I think personally that there's been too much focus on it's all about planning. And that's why we've had this rally. And I think there's, been a bunch of people just saying that's, once we're planted, it's over. That could be the case. But we still have a record yield by over 3 bushels that we have to prove to get a carryout that's unchanged from last year, with a demand base that feels like it's growing, and with Safrinha that's still really questionable in our opinion. We've had a horrible ending to it. Really last month and a half or so, the rains have been dismal. So again, I think it's more of, the change in fundamentals can be just as important as what just looking at what the USDA has to carry out being right now. I think that's what people are missing.
Justin, we we always talk about. I mean, it is a narrative of South American weather. Why are we so turning a blind eye to the finish in the Safrinha crop? I mean, just nobody's talking about it at all.
Yeah, I mean, there's some estimates here and there. I think it's a hard. We rarely trade the Safrinha crop, and I don't know why that is. I mean, when we're in the heart of the growing season, the main crop, we trade soybeans pretty aggressively based on South American weather.
Right.
And corn, I just can't remember a year that we've really traded the corn market based on South America, even though it's become such a large crop in the world. So maybe it's just because we've never really had a major problem. I mean, we've clipped it here and there, but usually the South, the U.S. crop's big enough to kind of dominate what's going on, and we're going into our growing season. So we've had a hard time looking at South America because Safrinha really aligns mostly with our growing season. And so we kind of like to focus on our planning progress and in yields and those kind of things. And maybe that's the right thing to do. But, there's 10, 20 million tons up for debate on what the Safrinha crop will be.
Yeah.
And with U.S. competitive Ukraine, you talked about, we went to the 200-day. I see why the funds actually sold 50,000, because if you're short, that's the place where you try to make a stand. If you're long-term bearish, you try to sell the 200-day. That's kind of the long-term trend area that these kind of guys like to follow. So if you're going to make a stand, that was the place to do it. Now it's right back up there. So what happens now? If it starts trading above there, I think that's a major, look what happened in wheat. They pounded it every time and tried to test those averages. And then when it failed, they flipped. So if I was a long-term short, that's where I'd try to get short again, the 200-day. And I think a lot of farmer selling happened there. So it actually makes sense why we failed there. Now let's see what happens. Now it's been, we've traded that price a few times now. So
And I think, and Kyle's point and comment is well taken too. The data, it's difficult to get data in the United States, and here we are trying to go, across the world and try to get crop data from, it's just you can't win in that deal.
No, it's tough. I mean, I think obviously we all know that acres continue to expand down there. The advantage of being able to double or even triple crop in some areas.
Mm-hmm.
Makes it easy to expand acres, especially when you have high flat prices. It's really a compounding effect to clear more land and plant both beans and then follow up with a Safrinha corn crop. So we know that, but the other thing we do know is that you can't if you don't rain the last 6 weeks, typically not good, during kernel fill. So, a lot of times you just have to look at what's happening. And in my opinion, every time we break, we find demand in corn right here, which it's constructive.
Yeah, it's great to see because it took us a while to get there. No, it's good stuff. Ben, couple of thoughts here as we start the week from the east.
Yeah, I think that one of the things that you have to look at is, Justin touched on it, that if you're a long-term bear, you should have been, initiating some of your short position there when we couldn't breach the 200-day emphatically. But we've had, a 44, 45, 46 cent rally, maybe 50 up to the highs in new crop corn. It's been extremely orderly from the producer having plenty of corn to sell on the way up. Yes, we got a whole nother crop out there in the field. But is this the place and time where managed money really wants to stand in here and pound corn and defend it? I think that becomes the question at this period of uncertainty, because today the end user is probably not in a position that they're going to panic yet. The farmer might be a little bit of a reluctant seller if they've already marketed some at this stage in the game. So is managed money going to put that position on in advance of seeing what acres look like and what pollination looks like? And I think if they do and they're wrong, I think the exit is probably not as orderly as the last 200,000 that they bought on the way up. So I think that's something to keep in mind as well. And that's been reflected in, I think if you look at volatility in corn and call slips in corn, that there is somewhat of a level of concern just from the option structure.
Very good. Got a couple minutes before we come into the open here. Rylan, by all accounts, just a really, really neutral report in livestock on Friday. Maybe give us a couple thoughts there and then what you see as we start the week.
Yeah, Dan, looked like everything came in pretty darn close to what the trade was expecting here. So the market's been really strong here. I think there's some concern about how the placements were really going to come out. And the fact that on-feed inventory is below a year ago levels, I think this just kind of secured kind of the narrative going in. I mean, it was a really strong price action going into Memorial Day. And usually what we see is maybe a little bit of an uptick in beef prices here just to kind of fill the retail slots. So wouldn't be surprised to see a little bit more of a friendly reaction. And overall, yeah, I mean, you could make the case that we were slightly off from the average guesses, but it kind of depends on whose average guesses you follow. So overall, I think the market's going to see it as slightly friendly just on the longer term, that supply tightness is still going to be there as we go to the fall. So I think that's, the trade's probably going to be focusing more so, at least on length in the back end of the market. And we did see the specs and the funds start to increase length on this move. They were at least reported long 46,000 contracts. And they added almost 10,000 last week. So it seems like the specs still want to stay long. We're kind of coming into that time frame where, we're getting into grilling season. So we'll see. I mean, it just doesn't seem to be anything really that strong on either side of the market. But generally, I would say just longer term kind of bullish perspective is still going to be here.
All right, appreciate the update there. Just came into the open. We got July corn up a penny now, 465.5 is the last. July soybeans down 7.5 at 1240.5, and July Chicago wheat's up a half at 697.75. A couple of administrative items here this week with the holiday yesterday. We will have export inspections today. Crop progress at 3. Ethanol will be pushed back to Thursday, and Friday will be export sales. So everything kind of moved back a day here this week. Every day that we're streaming, or every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a good start to the week, and we look forward to talking to you tomorrow.